You're in the Business Insurance Zone with me, Steve Savant, national insurance columnist and financial color commentator. This week on The Biz, the Medicare Supplement Insurance Series. And on today's show, Part 2, the medical supplement insurance market with MedSup expert Sam Corey III.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everybody to the Business Insurance Zone. I'm your host, Steve Savant, and we're broadcasting live to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And with me today, day 2, Sam Corey III.
Good to be back.
And you are the aficionado of all that is medical supplement. I mean, I'm amazed because I'm a self-confessed recovering mortality expert, right? I know annuities, I know life insurance, I do plans all based on life expectancy, retirement, business succession, right? All these issues. And now we're into morbidity land, right? Where we're talking about med. And right off the top, I looked at this again, where we have this Transamerica survey. And if you want to order it, just write me at thebiz@brokersalliance.com and I'll send it to you. This says, this question goes out to all these thousands of people. And it says this line, it says, are you informed about the health changes due to the health care reform, or PPACA, or Obamacare as we know it? And oddly enough, 41% of Americans say that they're informed enough. And I say that can't be correct, and here's why. Because we have senators and congressmen and women who voted on something they never read. So if they didn't read it, I highly doubt that 41% of the American public, I don't even think we had 41% that voted in the last election. You know, how could they possibly know it? But when we contact consumers, when we're talking about it, how knowledgeable are they?
On the Obamacare stuff,
PPACA, yeah.
You know, we're not in the under 65 market, and it affects the senior market just a little bit. But I would tend to say the people that we talk to, the people that I know personally, have no idea.
Right, and
I know, just no idea.
And I have no problem confessing I have very little idea. So let's talk about though how. And you said it does impact a little bit, but anything to really talk about though?
Just moving of the shell game with finances.
Well, I noticed, we talked about this yesterday, and I know this is out on the web, that there's a great debate between the two parties on there is going to be $700+ billion taken out of Medicare and put into Obamacare. The other side of the complaint says, no, that's not true. It's not being taken from there. But the GOA, is it GOA? GOA says, no, this is going to be reallocated. So if I understood this correctly, is that going to have an impact? Let's just for our discussion's sake, assume it's going to happen. What is the ramifications if they're going to lose $700 billion in funding for Medicare?
For people on Medicare Advantage, it's huge because early on in the program, the insurance companies received more premium dollar than really what their actuarial liability was. So they had a little pad, little incentive to get into the business. Well, that was supposed to all go away this year. They were supposed to be back on an even level playing field with everybody else, with Medicare. And they added a little bit of extra money this year to beef up the plans. And now next year, that money's going away. So the plan's no longer going to get that little cushion. They're actually going to go underneath the baseline. So they're going to have to cut back on benefits. They're going to have to charge more for the plans. Maximum out of pockets are going to go up, I think, but certainly premiums are going to go up, and there's going to be some reduction in probably service area too, where some areas where the plans are marginally profitable, getting a couple extra points, now are not profitable, and they're going to say, well, we just don't want to be in that county now.
Well, when I look at what's happening and what could happen, this is the perfect time to educate yourself on this. And when I'm looking through the education, I noticed that something must have changed here, because I noticed that there were plans that were sold through the end of May 2010, and then there was a new way to play starting June 1 in 2010. Talk a little bit about the different yin and yang on that.
So they eliminated some plans. Before June of 2010, there were some plans that they eliminated that were not big sellers. And then they changed some of the existing plans around. They changed Plan G around a little bit. I think they changed Plan C, some minor changes, and they added plans M and N. And so all the carriers started over again with new blocks of business. But the biggest change was for our conversation is probably what they did with Plan G and they included the excess charge, which is probably a whole show unto itself. But it's no longer an issue. It never really was an issue. Now it's no longer an issue with Plan G. So Plan G and F, the two most commonly sold plans, are almost identical except for the Part B premium, which is something that we can talk about later.
No, I noticed that you lost. I mean, I hate to lose any part of the alphabet here, but the HIJ kind of took a bath here. They're not there any longer.
That's right. And the J plan was the old Cadillac type plan that included some prescription drug benefits, and that sort of had to go away with Part D.
Right.
So they eliminated the drug benefit out of Plan J, so then it was sort of an overlap with Plan F. So let's just clean it up.
Yeah, I'm wondering if in the ultimate, if that $700 billion is not going to be there, I'm wondering if the people who constructed the PPACA really thought, since this is really doing double duty, that's why we're going to move it over. I mean, if it was replication of services, I get the reallocation. But I don't know if it's that.
No, I don't think it is.
Yeah, I don't think it is here. Well, let's talk about it. Let's get into the alphabet soup of Medicare. I mean, there is a lot to know. Talk about Plan A. Let's introduce everybody into Plan A, the basic physician issues, right?
Plan A is facilities.
Facilities,
So all Medicare supplement plans have to have Plan A.
Private or Advantage, they all have it.
Well, no, just MedSup.
Oh, just MedSup, okay.
And that pays your Part A coinsurance, your Part A coinsurance, Part B coinsurance, none of the deductibles. It pays for 365 days of extra care in hospital, and 3 pints of blood.
A year.
I don't know how much blood is. But it's in every plan, and every time I see it called out, it's sort of I'm like I need to know more about what blood costs. But 3 pints of blood is an important part of that.
If you have a transfusion, you are in deep trouble. I'm going to watch the way I cut myself as I get older.
And also Part A has that's where the hospice care benefit is.
Oh, wow. Well, when we come back, we're going to continue our discussion on Medicare supplement insurance. And don't forget to enroll in IULUniversity.com for the best training, education, and sales support when it comes to life
You're
insurance.
listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Did you know the average 401k runs out of money just 7 to 8 years into retirement? Time Magazine, the Wall Street Journal, and many other publications have warned of the difficulty of saving with a 401k. But what if there was a way to create tax-free lifetime retirement income with no stock market risk? Good news, there is.
You know, living in fear of the next market dive is not the way I want to live my life.
Why would I go out there and take on risk when I don't need to?
I have a lot less stress knowing I can't lose any more of my retirement savings in the stock market.
Call now to receive your free, no-obligation analysis of what this retirement vehicle could do for you, a comparison to your current retirement plan, and a free video that explains this exciting opportunity. Start planning a retirement you can enjoy instead of worrying about future tax increases and stock market losses. Creating income that will last your entire life is the most important thing you'll ever do. Take control of your future. Call now for your free analysis, comparison, and video.
Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Sam Corey. And remember, you can order today's giveaways at brokersalliance.com. And what are we giving away? Our Medigap summary, our Medicare summary, which itemizes all the important issues you're going to need to talk to seniors and your practice. And on top of that, we're going to also send you our producer PowerPoint explanations on a lot of the inside stuff that I think you'll really appreciate. And just a heads up before moving forward with any of the ideas that we talk about on the show, always consult your tax advisor or broker-dealer compliance officer before you start spouting out some of the public information that we share on this show. And we're continuing our discussion on all the plans on Medicare supplement insurance with Sam. Sam, we talked about Plan A. We got rid of a few letters, right? I mean, I'm thinking like we lost 3 or 4 letters. That would, if I had to do the ABC with my grandkids, this would not work. So now we're talking about Part B or Plan B. Plan B.
To simplify it as best I can, we're down to 4 plans. We have A, B, C, D, E, or F, G, K, L, M, and N. Realistically, it's Plan C, Plan F, Plan G, and Plan N are what's sold. So those other plans, we don't market them. We don't sell them through our office. I rarely ever see applications come through for those other plans. I'm not really sure where they're used, but we just don't see the business
Sure.
there. Most people, the industry standard would be the Plan F, which all the things that a Medicare supplement can cover, Plan F covers it 100%. So you pay your Plan
Now,
F
when
premium.
I want to make sure we all get this. In Plan F, which covers everything, here's what I have listed, and just help me if I'm managing this wrong.
Sure.
Core benefits, skilled nursing,
That's correct.
Plan A deductible, Plan A hospice, Plan B deductible, Plan B excess charges, emergency foreign travel, that's good because I'm heading to the Deutschland über alles, and then preventative care. So those are the things, when you get an F, that's the Monty, right? That's a full
Sure.
Monty version of MedSup.
Absolutely.
We'll talk a little bit about then the rest of them. So like you said, we've kicked out the ones that are rarely used. We just kind of managed for a second here, F. Talk to me about the other ones.
So a Plan G, if we look at the chart, and all this stuff is done on charts to make it easy to.
And we have this for you again. Just write me at thebiz@brokersalliance.com. I'll send it to you.
So F and G, you go down the chart, they're exactly the same. Until you get to the Part B deductible, which this year for 2013 is $147, which means every time someone that has in Part G on MedSup goes to the doctor, they're responsible for the first $147 before the supplement kicks
Every
in.
time they walk in.
Every year.
Oh,
It's
every
a-
year.
It's yearly deductible.
Oh.
So when you look at the pricing of these plans, if you can save more than $147 by buying a Plan G over a Plan F, well, there's some real cost savings. And there's some things we can talk about later that really make it a benefit to start looking at Plan G over Plan F. Now Plan N, the other one that's pretty widely sold, covers almost all the core benefits, but there's a copay. If you go see your primary care physician, there's a $20 copay.
Now, let me just stop you there. So when I'm looking at these plans, there could be how much do I have to use as a deductible? What is my monthly premium going to be? You have to do the math, see which one's going to work out best. I might look at myself. If I have a disposition towards bad health, this may be an issue. If I'm in pretty good shape, my wife, and who actually climbs mountains, who eats right, and is in unbelievable shape for her stage in life. That's all going to be determined whether you want to play in any of these plans.
Absolutely.
So tell me about N again.
So N has some cost sharing. So when you go to the physician, there's a $20 copay. Specialist is 50, emergency rooms or 50, either emergency rooms 50 or. But anyway, the primary care is a $20 copay. So that will reduce some of the claims occurred against the MedSup carrier. So. The theory behind that plan is when the consumer has some skin in the game, when it costs them something to go see a physician, that maybe they won't overutilize, they won't go in for the.
And the premium then should be lower.
It's substantially lower.
Substantially lower. So if you had to rank, because we're walking through all these plans, A, B, C, D, no E, F, G, no H, I, J, K, L, M, N. Which ones would you say rank? Give me your top, because you say there's really only 4. Give me them in order of what's sold.
F, G, N, and C would be my best guess based on the mix of business that we see in our office.
N and C is the last one.
Correct.
All right, so there's reasons for this, and so when we're presenting MedSup, we have to look at deductibles and premium, and then talk a little bit about health concerns and so forth. When we talk about these plans, how much of the math really impacts the final sale by the senior? I mean, is it really he's looking at, or is it's not that much difference between plan to plan on price?
The plan pricing is somewhat irrelevant. Because they're buying the agent, they're buying the knowledge base. Most of the plans are priced, they're within $10 or $15 a month, not a significant amount of money one way or the other. But they're buying the quality name of a carrier. They're buying, but mostly they're buying the agent. And because these MedSup contracts are the only way they can be canceled is if you don't pay your premium. They're guaranteed renewable. So you want to put yourself with a company who's going to be around, knows what they're doing, can manage their business, and will take care of you going forward.
Ratings of a carrier matter?
Yes.
So to seniors, do you think that matters?
I think that the people that are in that, they're 65 and older, that generation, I think it's very important.
So to them, that's an issue.
Yeah. I mean, would you rather have an A+ rated carrier or B minus?
Well, I want an A plus, but I want to know what that premium is. Maybe that's my issue. What's their claims paying ability? Have they been paying their claims to seniors? Have they been up to snuff? And are they people you can trust? I mean, we're looking for big name recognition carriers that have been around forever and actually are in this market big time. Remember, you can watch our show and all our shows on MedSup by clicking the red on-demand video button right on our homepage at brokersalliance.com. Well, that's the Buzz on the Biz for today. Get in the zone. The Business Insurance Zone.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.